Few minutes after 12 noon, and we are back with another edition of what we call Chart the Markets. And before we get into the the grit of what we can talk about today, I do want to thank our friends at FEG token, feg.io, and smartdefi.com, in addition to, of course, BYDFi Exchange. And today we will also be giving away a couple trading bonuses from BYDFi. In order to be eligible to win, you need to pick up an account from one of my links. You'll find that in my Twitter profile at Blunt420, at Blunthouse Technical Analysis, and you'll also find it at Blunthouse TA in the description on our YouTube page. And you need to have one of those in order to be eligible to win one of the trading bonuses. And I also want to thank our friends at TradingView, because we're using their charts, and I think if you're considering taking this even a little bit seriously, you need to get yourself a TradingView account. It is probably, well, basically is the gold standard of charting for the masses, and it has plenty of features, and there's probably nothing that you can't chart, and it's a great platform. And if you're not using it and you want to give it a try, I suggest you do that, because once you start, you'll probably be hooked on it. So now that that's out of the way, here we are on a Thursday afternoon, an early afternoon at that, and we're looking at a 4-hour chart of Bitcoin. And one of the things that we kind of talk about here that's, I think, are really important is the ranges that we can create using just very simple tools. And this here is a volume profile on the right hand side of your chart, and it shows you where money has been and where it has not been, or where it's been for a very brief period of time. And when that happens, you create these gaps, these little indents that you'll see. Those indents kind of act as a draw for price. But if we go back to last week, or maybe it was even our earlier session this week, we saw this happening, right? Was this Tuesday? There we go. Yes, it was Tuesday. And we could see that price had kind of wicked a particular level that, it's an easy spot to connect some tops and bottoms. That's all I did on this chart. And in doing so, we may have kind of picked what might be somewhat of a top for this wave. It wasn't the intention at the time, but by just simply adding, looking back, connecting tops and bottoms and things like that, real simple stuff, we can create ranges. And on top of that, we also had the volume profile, the upper and lower value ranges of the volume profile. Right? So we knew on Tuesday that we were trading above the upper value range. That's this, in this case, thin green line. We knew we were trading above it. So essentially it's a premium. And we noticed that we wicked a level that kind of gets my attention. That level is the T line, and it's the top and bottom of these candles here, that just before the rollover. There's no science behind that. Those are areas that always attract my eye. All right, so that wick and the pullback tells me that maybe there's a bit of a fade going on, but where does price fade to? Well, the upper value range. We talked about that, and we found it. And if you don't hold it and you fail at one level and you find the next, what did we find? The point of control, the POC, as we call it, which is this kind of thin red line. And that area is identifying where buyers and sellers have been in the past. Because when you break one level, you find a next, current price is really looking for past price. That's why it's attracted to that level, because it's a high concentration of past price. But you didn't stay there very long, right? You bounced, faded and bounced, and then again you take off. And where do you take off from? The lower value range. And we show this kind of thing every week. Hopefully so that, people will start to go, wow, there might be there might be something going on here. Right? We talk about this big impulse candle down. Snapback. Our 5 EMA, which is the shortest time frame I'm using as far as an indicator goes right here, starts to change color. Why? Because it's sensing an incoming cash. So at the very, very least, this just could have been a snapback, right? You could have taken the trade really, really early, hoping that you get that snapback, and you did. But in this case, you actually got a legitimate breakout as well. And price will be attracted to areas that it's been before. Right? That's why we connected this line here. Now, is it an accident, that we came within pennies of this? Not really. Right? It's just the same ebb and flow of dollars. Current price being attracted to past. Where are we thinking that price might want to go? Well, how about to where it's been before? And now that we know that, and we kind of have some other cues that we use, right? We see price being real far away from that 5 EMA. It's the horse that's too far away from the barn. Sometimes it likes to come back and test it. And there you go. Entry down here, and you don't have a validated exit until up here. This could be the insurance you pay to take this safe confirmed entry, and that would be okay, because all of this is what's in the sandwich. This is the bread, and that's the bread. All this is your profit. Now, with this methodology that we're using, where we're depending on the divergence between two relatively short-term EMAs, and I'm sharing this stuff with you because it took me a long, long time to figure it out myself. And I'd much rather share it with you guys now, so that you don't have to spin your wheels like I did for years trying to figure out the Da Vinci Code. Right? This is really easy. Real easy. You just have the opportunity to wait for your confirmation, and if you take it, you just let price ride up. This is a confirmed bullish trend. As long as you have divergence between those two levels, you're okay. And we show this to you each and every week because you will see these same things time and time again on your charts. And if you're thinking of your chart in the context of it being a roadmap or a path for you to, then the operative word is going to be follow, not front run. We've made it real easy for you to do that. It doesn't matter the time frame that you decide to trade. Find a time frame that feels smooth and clean to you. Right? If you're sitting there and you're looking at a chart and you say to yourself instinctively, wow, you know what, I can't make heads or tails of this thing, then you have to find another time frame to trade. And different assets will also look quite differently, right? Here's our Bitcoin, same Bitcoin chart, but I wanted to show you the 12-hour because some of us feel like, hey, we trade 24/7, so maybe the 12-hour is a real good representation of what the daily is supposed to be. Now on the 12-hour, you don't have a confirmed sell signal yet or anything like that. But what do we know? And I'm trying to show you this with the minimal things on the chart. Volume profile, the T line, which is the 8 EMA yellow, and a 5 EMA. Simple indicators. The trick is learning how to trade them and interpret them, because this is a language. But what do we know about what we see on this chart, this 12-hour? We know we're trading at a premium or in some very light volume. We're totally aware of this big volume gap, That creates a shelf, which essentially is the upper value range in this case. And we've demonstrated time and time again what happens to price if it falls into these gappy areas. It can move up or down quickly. So if we start to fade this light trading, we get into these gappy areas, and this shelf probably wouldn't last very long, and you get into this, is it reasonable to believe that price may fall down to this upper value range, which is wherever you see green is value? Yeah, it's not unreasonable to think that. But how do you feel comfortable with that? Comfortable. It's one thing to think it, but what is making me feel comfortable? I have price riding up, going sideways at the top of that bullish wave. And I have nothing against consolidation, right? But we had a nice move higher, and now we have a couple days of sideways price action. None of this price action, with the exception of the first wick, tested that previous level. So my takeaway is, maybe a little bit weak, and then price starts to fade. This wick, didn't really amount to anything, did it? At one time, this probably looked like a nice candle, but it completely faded away, and our script picks up on the 5 EMA, the fade. Gives us another clue that maybe there is a pullback in the works. Next candle closes below the T line in a significant way, all giving a little bit of validation that maybe this thing is weakening. But we're just simply using a methodology and a series of checks and balances that pretty much anybody can interpret and understand. We're not throwing 100 different indicators on our chart. This is just a volume profile, taking the time to draw some resistance levels and understanding that the market's telling us it's okay, completely safe in here, and it's telling us we have an early entry opportunity down here. So this could have been a snapback play. I like these two equal bottoms because you're hoping that this next candle snaps up. We talk about this quite a lot. You have the impulse down, and then we see candles that don't snap back like this. What does that usually indicate? Right? We go sideways, and then you come back to these levels and you go, whoosh. Didn't happen here. Nice bottoms, snapback candle. It just happened to keep going. It's giving you some real simple ways to make the safe, profitable trade, and then a little bit of a tip on how you can take advantage of these impulse moves down. Right? And the benefit that we have is because in our system, if you take this as a long and you simply get, a bit of an up and then sideways, well, you know what's coming next because we've shown you 1,000 times. So you're either going to take this long and have it run, or you take this long, watch it stall, go sideways, and then fade. Shown it 1,000,000 times. So you really shouldn't be too surprised. Not anymore. And if we want to just add other levels of validation to our charts, what can we do? Well, we have a couple options. We can run some fibs. Get rid of that for a sec. Just to give us an idea of, hey, what might a retracement look like? And this is just really quick. I'm just taking this bottom wick to this top wick, and it puts 618 at 104,230 something, 104,231, I think. And again, this is just quick, but that's one tool that we can use. So if in fact this is kind of the end of this wave and we start thinking, okay, what's the retracement looking like? We've walked you through testing that previous level and failing, going sideways, which is really just, this was 2 days of should we or shouldn't we, should we or shouldn't we, should we or shouldn't we, and the answer was we should not. And price pulled back. And you had every indication on this time frame what was going on, because you could see it unfolding. So now that you know that you have, just like this was the snapback up, you know, here you have an example where you get an opportunity to have a nice move down and catch it early. Price breaks the T line and all that support, boom, your next candle opens below those levels. You're in the driver's seat now. The only thing that will mess this up for most traders is using so much leverage that you can't manage this green candle. Because remember, this is a 12-hour chart, so I know many of you are on smaller time frames. So you might have some problems with that candle. But you can't say, and that's something that you gotta have to learn how to manage, but you can't say you didn't know how this was shaping up. We saw it way back, you know, here earlier in the week. And we talked about ranges earlier in the week and how the volume profile and a few simple averages can help box in price for you to trade. Right? So now we have an additional target at 618 on the fibs because they work, right? We can't explain why, but we know they work. But what else can we look at? We can look at major moving averages. Real quick, let's just throw on a 20, a 50, and the 200. So, same 12-hour chart. Do you feel now that you might have just a little bit more of an understanding how to manage what's happening? Because, hey, now that you see the 50-day moving average, does it start to make a little bit of sense for you? Do you feel better about being able to read how price is behaving? Because you can see literally the support and or resistance in the 50. But what makes it more powerful for you is that you also know how price behaves when it gets to these levels. If we go back to this particular top on the left, we broke the 20, kind of split it in half like it wasn't even there, along with everything else for that matter. But even with that, what would we feel comfortable doing? Like if you're short in here and you need a target, you're short to what? The 50. Break one level, find the next. You know, it's not your job to nail the wick and to the penny every time. You need a target. That's what this gives you. And you could have felt real good about taking this short and having a target at the 50. And the reason I'm bringing up the targets is because I know I've gotten through to some of you about putting stops in place. And that's awesome. And I want to commend you all for doing it. Right? Again, I'd rather be stopped out with a small loss or a small profit than not have the stop there and have the kind of mother of all losses. I don't want that. But what I also want you to do is set targets more frequently. So I know you're setting your stops because you're telling me that you're setting them, but I'd like you to start setting more targets. Because what we want you to be able to do now is grow your account, right? Like you can't grow your account if you're not taking profit. And I think part of the reason some of you aren't taking it, at least what you're telling me, is that because you're not setting those targets, when you actually are bang on your analysis, but don't have that target set, in a blink of an eye, price could hits that level and then bounces up or down, and then all of a sudden you're in chase mode again. And the greatest opportunity that you had is now passed you by. So excellent for putting the stops in, but start putting the targets in as well. And it doesn't mean that you can't adjust your level, as you're managing the trade. I do it all the time. I've been doing it all morning, moving my, I've been short, so I've been moving my stop down because I'm not using a trailer, but I was just moving my stop down based on the different time frames that I was trading. At the same time, I have a target in place and an order's already set so that we can get maximum profitability based on the analysis that we do. Right? You don't have to fret about whether or not price breaks the level that you set as a target. This is what I see this all the time. I'm saying, I closed the trade and the price continued to fall. So what? You made money, man. Congratulations. But here's the best part. If you did close your trade here, what do you know based on this chart? Right? What do you know? You know that if you close your trade here, you're still okay to go short again. So there's nothing wrong with taking your money off because you hit your target. You can still re-enter your short trade if that's what you want to do, because the chart's told you that it's all right. And it'll stay that way. Here goes the arch. We show it all the time. All of this can't break the, you can't, these levels for me are somewhat mystic, right? Like I love how price bounces off the T-line, the 5 EMA, and some of these major moving averages, and I'm always telling you that I'm looking for price action off the 50 because there's a story to be told there. Testing and failing the 50 on a longer time frame like this should be setting you up based on what you see, and I'm sharing the same stuff with you that I do every day. So here's your downward move, here's your sideways stuff, but you don't know, the price could go up or down, right? Watch the divergence. This downtrend never broke. Was this dead money for a while, sideways? Yeah, sure, I get that. But look, boom, you go down again. The chart is telling us what it's doing. Like, look, we still have the divergence. There's not enough price momentum higher to break the trend, and it's just a slow grind. And the 50 continues to be, you wick the 20, but the resistance here continues to be the 50. And what happens, why do I use an ice blue 50-day moving average? Because the guy that taught me, David Steele Smith Elliott, called it the ice. You don't want to fall through the ice. An ice hole failure is a bad thing. If you get support from the ice, however, it's a good thing. But break through the ice, and all of a sudden life gets a little sketchy. And here we go again. And what happens? Take out the previous waves, low. Every week. We'll probably show this 10 more times today. And in doing so, is your trend still intact? Yeah. Until it isn't. There's your 50-day, 50-day. Now, this is the one that's real, right? You don't really have anything as far as a significant trend move until you break that 50. And that gives you a nice pop all the way up to test this level again. And that's basically kind of where we are today, right? Last couple days. Here's your sideways action, and there's your fade. Your fade is right to the 50, and right now, you're fighting for your life, trying to hang on to the 50-day moving average. And even though you have a green candle, does it necessarily mean that you're in an uptrend? Because everybody in here knows that somewhere out there, there's someone who's longing this candle. And that's fine, right? Like there might be a trader. I love green candles at the 50-day moving average. You know that. I talk about it all the time. But this one still has a little work to do, right? The stochastic RSI, and these are the things that I would be looking at and trying to analyze just like you. This stochastic RSI is still really heavy to the downside, and it hasn't shown yet that it wants to change its mind. Now it may, right? You know, we could see this big, you know, V-type turnaround similar to this or this. It's highly possible, but right this moment in time, it still looks a little heavy. And so does the Fisher transform, which I love, because I believe in fibs, fractals, and filters. The Fibonacci's can give me those targets and areas of reversals, support and resistance. Love that. Fisher transform is one of the filters that I would use because it does use a Gaussian channel and filters noise. So is all I see when I use this is a nice uptrend down and a nice uptrend and a nice downtrend. That's it. You don't see chatter, chatter, chatter. It's very clean. And then the MACD at the bottom. And how do we get to, how do we know where we're going to go? Shorten your time frames. Right? Price will take the path of least resistance. How often do we see this? And let's, this is interesting. Here we have yet another example of where price has tested the T-line. And where's the T-line? The T-line is on somewhat of a shelf on the volume profile. So I'm not surprised it would pause there. And you can anticipate that all the time. Slight pauses at small shelves. What will be interesting to see is, does it break this? Do we get enough price momentum to move our short-term average and pull it up and give us a move like this, as an example? Or do we just test the T-line and fade and do this? First wave down, retracement higher that fails, take out the previous wave's low, test the 50, and then the 200 is right beneath it. And where is all that stuff? Right in the middle of this volume gap. So, what do we do? If I'm short up here, you have two choices. You're going to, and listen, we all trade slightly differently. I am in kind of the camp now when it comes to trading crypto that I don't play around with trailers anymore. They don't seem to serve me. So, when I have a target, it usually all comes off. Regroup, do it all over again. And that's just simplifies things for me, and it works for me. If you have a different methodology, that's okay too, as long as it works for you. Right? But if I was short up here and I've broken the 20 and I haven't really tested the 50 yet, I might be inclined to see how this candle plays out a bit more. If it starts to fade, I might be more comfortable to stay in it and let it find the 50 or the 20-day or the 200-day down here. Because this could just be wave down, move up that fails, and then you have another move down, another retracement higher, and then another move down. So again, the 4-hour chart always lets us come back to our streams and go, yeah, we can actually see how that played out. This volume gap, the 50-day moving average, the 200-day moving average, the point of control, where all these buyers and sellers have shaken hands in the past, will be a draw for price if enough money does not come in to push price higher. That's what I'd be looking for. But I was asked earlier, like, where do I think, and we're looking at Bitcoin here, and I don't want to spend too much more time on it, but someone was asking me, where do you think it could go to the upside? And that's the $1,000,000 question, isn't it? Because nobody really knows. Like at this point in time, is all we're doing is playing a price exploration game. Really. But, if this does break to the upside, you'll notice how each of these legs let me just show you this. So here's your main leg, here's your retracement. This second leg higher is shorter than the first. This third leg higher is shorter than the second. You can anticipate that the next leg higher, if in fact there is one, and this is still a bullish chart, will probably not be the same as this one is. And you can see how they're a little narrower and shallower every time. But even with that, it does get us into this 115, maybe 120, I don't know. Time frame, I have no idea. Because we're in too much of a volatile market. But I don't really look for or spend too much time thinking of where price will be in the future to too much extent, because I'm primarily indifferent to it. I don't care if it goes up or down, because I trade long and short. And what I look for are the big moves up or down and the opportunities to find those moves. And where do I find those moves? Well, you'll find them, like if you're looking for one of those moves to the upside, look to the value ranges, look to the point of control, look to major moving averages, like here. And when you can line up as many of those positive attributes as possible that have a tendency to push price higher, again, look for these oversold levels in the stochastic RSI. That's, these are the things that I'm doing every day. Simple stuff, right? We don't have to overcomplicate it. We do that enough as it is. But as far as where it could go, each of these legs will be a little weaker. And if this does break out, I would anticipate the same kind of effect, be a little weaker, maybe push 115, 120 time frame, no idea. If it fails, you come back. If you fail the T line, well, then you're going to test the 20. Fail the 20, you come back to the 50, and so on and so on. You have to appreciate that on the weekly chart, this is a premium, right? This is light volume, not as many buyers and sellers up in here. So when someone takes their foot off the gas, and if you've ever done that, you've been on the highway, you're just booking it, and you let your foot off the gas, and boom, when that car slows and that momentum stops, that's what happens with price, right? You don't have to short it to have price go down, right? Just take your foot off the gas and price can go down, and especially in crypto. So I don't know if that answers the question or not, but I think you have to note that each of these legs higher is weaker, and if this one was to bounce, it would be weaker as well. So it would only put you somewhere up in this neighborhood, only, I say. But if it fades, and I think that's the question that a lot of people don't want to talk about, but need to, where would price go? The first stop's going to be the upper value range. Well, it'll be the major moving averages, but this upper value range, there's a lot of price here, and there's price back here from these two tops. And if there was to be a total melt, that's how it would end up. But you would first test these levels and hope for support. Right? But if it all fails, that's what we look for. This is a weekly chart. It could be any time frame. It wouldn't matter. And if you guys have any questions, just jump in at any time. I wanted to show you, and I'm going to get a volume profile here that I have to take off. Oops. Pardon me. All right. This is oil. And I talked about finding a chart that's smooth. Now, this could be anything, right? This could be Bitcoin, it could be, doesn't really matter to me. But finding a chart that's smooth for me is really important. Like really important. This is a mania induced hobby or profession anyways. But having the ability to find nice swings has always been something that I find really important. And it's one of the reasons that why I do suggest that you not try and analyze 100 different assets, right? Find a handful that you're interested in, or it's a vertical that you're familiar with, whatever the case may be. But find a handful of them and get to know them intimately on every time frame. And you'll notice that not everything trades the same. This is oil, and what I like about this chart are just the nice clean moves. You know, down move, up move, sideways, and then, you know, the nice big move higher. Find time frames that suit your trading style and your life. Like if you're trading short time frames, but you only have the opportunity to be in front of a screen for 5 minutes a day, it's probably not going to work out well. Maybe you'd be better off trading something over longer time frames. You can trade the same asset maybe, but trade it over a time frame that suits your trading style and your lifestyle. Like you can't be scalping if you're only going to be focusing for a very short period of time. It probably won't turn out well. But just find charts that make sense. Right? They do not all, like this Bitcoin chart, obviously more volatility in it. It's not as smooth. Is it still tradable? Absolutely. This is probably why you do trade it, because of the volatility. The problem is that you have difficulties at times managing the volatility, which I completely appreciate. I get it. Totally get it. But the chart will tell you what it's going to do. You just have to be able to follow it along. And sometimes they look the same, right? Like in crypto, you're going to find charts that look the same for various different reasons. But in crypto, it's because it's just not a large there's not as much liquidity. A lot of these assets are following one asset. Every once in a while, there's an outlier. But primarily, everything does follow one asset just because it's a smaller sector. But it's highly tradable. All of it. This is Solana, and I know we have some friends that love to trade this. And this is an example of something that, you know, I think does have real nice, smooth ups and downs. Nothing goes straight up, nothing goes straight down. But Solana does have nice, manageable moves, and throughout these moves, you can make trend trades. That's what I like about it. Because it seems on this thing that it does get the quote unquote runners more often than some others. And I only know this because I've kind of added it to one of the few things that I do chart now. And it seems to be that, you know, out of the 5 or 6 things that I chart, if I don't see any price action that I like, I come to Solana sometimes and go, wow, look at this. This is just what I've been looking for. But I don't need 100 assets to chart to do that, just a handful, and get to know them well. And they, hey, Rico, how are you?
What's up, Blunt? So you're talking about Solana, and you know, I'm watching it right now. You know, that's why I traded, and I think that's some good stuff that you're saying. You know, just really focus on the ones that really resonate with you. I think people should realize some of the not hidden messages, because you're amazing, bro. Honestly, it's like I almost can't do a stream without giving you credit, because you've helped me out so much,
I appreciate that.
tremendously, to make it so much easier for me. And it's like it's the wisdom and stuff, and it's like, I don't front run things. I do follow the treasure map and things. And Solana's a great thing to trade, and if that's something that you resonate with and you like it, right? Because you can get those runners on there and stuff. And I think people overwhelm themselves because they're looking at a bunch of pump fund listings, and then they're also trying to trade. It's like, when it comes to your futures trading, just have a handful select. Like, I don't even hold as much. You would think that I'll be a Solana maxi as much as I traded on futures, but I'm really not. I just love the way the chart moves, and the fees are cheaper than trading Bitcoin. So yeah, I'm looking for a break over the 50 right now on Solana, on the just a 1 minute chart and a 5 minute chart. I'm doing some early morning scalping because there's some nice volatility in the market. So want to take advantage of it and stuff like that. But yeah, I appreciate it, man. And I caught some new wisdom right when I came in, but I didn't want to stop it. So I was just listening. It was like, this is one slice of bread, this is the others. I was like, this guy, I don't know if he's reading a book or writing a book, but maybe he has some stuff.
Yeah. But one of the things that I'm glad you mentioned the shorter time frames, and because I'll be the first one to admit when I'm struggling, right? And we all have those kind of moments, right? When it doesn't matter what we do using, the methodology that we've become really familiar with. You just can't seem to make a good trade to save your life, right? And that has happened to me over the last couple days. And I find, okay, and I'm trying to do everything right all the time. It doesn't always work, but I'm trying to do it right. But I became increasingly frustrated, and I took a step back, and I was like, okay, what am I doing wrong, and what do I have to change up? And I think, in retrospect, I was trying to look too far into the market, and that was clouding my judgment when it came to entries. I'm thinking I know where price wants to go, and I'm not front running, but I'm analyzing the chart. But for some reason, I'm getting chopped up, right? It's not working for me. And I'm not using a lot of left. I'm just not getting good trades. And the way that I trade is pretty simple, right? Like, I'll be honest. Let me just drop this right down. This is BYDFi again. I hate to use it as an example, but I like to trade it because of the moves. Now, it is very volatile, so I typically back off the lev and I try and stick on longer time frames. But coming back to how I trade, here's what I know, right? This was a big top for me. Let me just pull up in the 50. So here you are trading above the 20, the 50, and the 200. We talk about it all the time. And I started taking on higher lev, but real short time frames. And super short time frames. Whoops. Either, the 1 minute even, and the 3 minute chart, believe it or not, which I don't typically do or use. But here's why it was working for me. Because I was getting an opportunity. This is basically the same top on the shorter time frame, right? I probably entered here last night 3 or 4 times and got stopped out 3 or 4 times. Right. And each time I probably, I lost a little bit or was green a little bit, an insignificant amount. But because of I'm using signals, and I'm using signals, in this particular case, I knew I was trading on other time frames above the 20, the 50, and the 200. Also on the shorter time frame. So what did I do? I used more leverage and finally caught one that crashed, right, at high lev. And then guess what? As soon as I'm green, actually, as soon as I get an opportunity, click my stop in at zero, at like right at my entry price. And if I get stopped out there, I don't care. Right? If I get stopped out that quickly with making no money, I'll take the stop. But I'll re-enter again when I think I have a reasonable entry and I know it's a short time frame, and I do the same thing, put the stop in. But guess what? I don't always get stopped out. And, 2 out of 5 of those turn into one of these. Right? And then before you know it, you're up several 100%. Right? Because you're juiced, you got a good entry, and you took it on the chin. You were prepared to get stopped out. You didn't let it run away from you and then, get liquidated or anything like that. You put the stop in and you took it on the chin if you had to. But I had to change it up because I was getting nowhere. So I just basically went back to my basics is what I was trying to do. Trying to look for these kind of entries, long and short, right? Until I caught one. And now all of a sudden I'm not even thinking about what I was screwing up before. I feel like myself again. Right? I got a good entry, albeit a short time frame and a little bit of juice, but was able to get in the driver's seat early on the one that ran, and I'm okay with that. And I may or may not be still in it. I don't even know, right? Like, because I have a target set and a stop set, right? And like these big runners, this is what happens to a lot of people. They don't have any target set, so what happens? They on the retraces they lose it all, or it gets away from them. And then you gotta hope, which nobody wants to do, is that price comes back, and that doesn't always happen, right? But I got this at the top again, so we'll see. This may have stopped me out, but we'll see. But don't be afraid to change it up. Like I tell you all the time, to get off the short time frames, because I know everybody's on them. So, I'd rather see it on the longer time frames, but I get it. I'm human too. But I had to change it up because nothing was working for me. And I was just basically going back to my own basics, right? Wait for the signals. And I was literally doing this off short time frames simply because I was just retraining myself, trying to get a rhythm, right? Wait for the signals, wait for the signals, wait for the signals. There's that ebb and flow of the market that sometimes, for whatever reason, we feel like we lose. When you're in the zone, you're in the zone. There's nothing that's going to knock you out of there except yourself. Right? But, when you're struggling to get back in it, I think simplicity, for me, works best. So this is all I was trying to do, is just follow the signals. Like, how do you screw this up? Right? Like if you get a good signal up here on any time frame and you're properly stopped and risk mitigated, you're fine. Right? And now we know what a runner is, right? Like I'm sure Rico, when you see that kind of divergence, you just get excited, right? Because you know that it doesn't matter what happens, as long as this divergence is intact, you're okay. There's really nothing to argue about. And the best part is if you know there's a volume gap, when you roll over, this is what you hope you find, right? The bottom shelf. Again, it can be any time frame. But, you're finding a time frame and assets that have nice, smooth moves that work for you. We've got a lot of weird stuff going on in markets only because of the volatility that's being caused by so many different things. Let me take this off. This is oil. Now apparently there's some geopolitical stuff that they say has spiked oil. But even through all of that, there's your 50, you break through the 50, what do you find? The 200. Break one level, we find the next. We don't know what's going on in the world other than what we see and hear, and how much of that do we even, know is true anymore. But we can follow price. And if you're not following price, I don't know what you're following. Seriously. If you're following news and you're following the conversations that we sometimes see in spaces or other types of social media, you're far better off following price, because it's the only thing that matters. It's a real-time representation of what money is doing and not what people are saying. And the only actionable thing that you have is price. And by giving you the ability to learn how to interpret what price is doing, because it is a language, that will give you an edge that nobody will ever take away. Sometimes does it feel unorthodox what we do? Sure, I get it. It does. But you have to block out everything other than what you see on the chart. Block out what your friends and tell you that, you can't tell anything about anything from just looking at, lines. Nobody can tell anything about that. Sure we can. Sure we can. But you just have to block that stuff out of your head and focus on what you do, right? Focus on your charts. Focus on what's important to you. Focus on the assets that you follow. Sorry, this is US dollar. Or DXY, which is the US dollar index. Doesn't matter the asset, right? This could be ABC Company. Could be their weekly chart. But ABC Company wasn't able to hold the 20. This sell signal actually came at the 20-day moving average on the weekly, which is kind of significant, right? And price broke one level and it found the next, split right through it like it wasn't even there, and it happens again. This is all very bad, right? Like, we hope to find support at these areas, but we're not getting it, right? Another example, here we go. ABC Company, DXY, daily chart, weekly chart, 5-minute chart, doesn't matter. Here's your impulse down. Did you get a snapback? Nope. Right? Sideways. Here you go. You test the T line, but nothing happens. Your trend still intact. This is why we follow price, okay? This is why you follow price. Price doesn't lie. It's telling you what it's doing. It's right in front of your face. Where we get into problems is when something that is right in front of our face, for some reason, we tend not to believe sometimes. So we're giving you some tools here to reinforce for you what price is telling you. Some people interpret this as I'm going long, right? Because they're not looking at what we're looking at. They don't believe or understand or even want to learn some of the stuff we talk about here for whatever reason. Maybe they think it's nonsense. Maybe they think it's BS. Maybe they think it's just hocus pocus. I don't know. I don't care, because I know it works. Sell signal, failure of the 20-day moving average. The divergence here, this play was already intact, but there has been no reason to long the US dollar other than these 4 weekly candles that didn't break trend. That was a trade maybe, but what really is it? Move down, retrace, move down, retrace, move down. Are we trading below the T line in the 5 EMA? Absolutely. Is that divergence picking up? Yeah, it is. So does that mean we should be bullish or bearish dollar? I don't have an opinion aside from what I see on the chart. Like, I personally don't have an opinion. The chart has the opinion that I have. And I was speaking. We remember we had David Nikoski in here a couple of weeks ago, and we hope to have him back again. And was speaking with him about the dollar, and there was a time when it looked like the thing wanted to go through the roof, but the chart is right, or the consensus is right until it's not. Early opportunity to enter. Here's your safe confirmation. Ride it all the way up to the top. You get a doji. Your short-term average starts to show you that it wants to fade. Your next candle breaks the T line. Then you get your confirmation that you're actually going to get a breakdown. But all of these things are checks and balances that we use to determine whether we're on the right side of something, or is direction changing in the way that we want it to. All simple stuff that we can just use time and time again. The top of a bull run, and you see a doji, and in this case we give you an opportunity to sense the fade a little early. Should give you everything you need. Here's what people are going to be talking about next on the DXY chart. Does anybody know what I'm going to say by looking over here? Pretty soon we're going to hear about the death cross. The death cross on the weekly dollar chart, where the 50-day moving average crosses down through the 200. Personally, I don't make too much about it, but anytime you have a shorter term average crossing down through a longer term average, it's probably not a good thing. And when that's on longer term charts, it is the sign of a larger scale pullback. Right? But the way that we read charts in here, and always have, this chart reads very clean. Nice entry, nice exit. Nice entry short, impulse down, sideways back to the T line and or 5 EMA. And does this give you an opportunity to do what? To re-enter your short. This is not, that's not the candle to long over here. You have no confirmation other than, well, actually you do. The confirmation is don't go long because the market's telling you to stay short. Don't long those candles. Those are not the best setup candles. I do not long those candles.
I won't. I promise.
Yeah. And you probably have, right? That's why you know, because you've had.
That's why I know.
And it's just like we talked about before, Rico. Like, how many times you have a friend that says, "I don't know, guys. Every time I buy something, just sell, okay? Because as soon as I buy it, it's gonna, price is gonna fall." And I feel badly for those people because probably all they're doing is they're buying that candle, unaware that the candle is not a reversal candle. The candle is still well within a confirmed downtrend, and in all likelihood probably won't go anywhere. And then what do you know? Before you know it, this candle takes out the previous wave's low, and this one was even nastier, taking out this low. Like, we show this all the time. We're not making this shit up as we go here, right? Like, this is stuff that happens time and time again. Another example, impulse down. You can't change trend, right? This divergence is telling you the trend is still intact. So what do you have here? You have another doji on a retrace. And it just gets worse.
I think that happens like when a lot of times, when people say that stuff, I know from like my experiences, like, I can short or long the market now a lot easier. So, trying to force longs on a regular basis, it's like, that's where that confirmation bias starts to happen. It's like, okay, yes, now it has to go long. Now it's been doing this for so long that it has,
Yeah.
And it's not the case. It's, like you'll start to get excited. Like, how you said that maybe most people would look at that and be like, oh man, that's a bad trade. But when you start to follow that treasure map, it's a good trade, honestly, if you're just shorting it. If you're shorting it, I mean, fantastic trade, and a trade that to just stay in. If you caught if you caught some FOMO thinking it was the wrong candle. That's why you got to layer this up. You got to
Mm-hmm.
understand the asset that you're trading, so you know the characteristics, because it has a personality. It does. If it's
Mm-hmm.
talking to you, it has a personality and stuff. And I'm familiar with Solana. I'm now very familiar with your indicator, and when I layer that indicator using something else, right now I'm in a trade in Solana that if I was not using the blunt house indicator, again, I would have got psyched out. I would have sold. I literally was looking right now while you were talking. I'm like, should I take profits? And I'm looking at the 1 minute and I'm looking at the 5 minute, and neither of them told me to sell. But in my mind, right now, my mind is saying, hey, you're up 20%, 21%, now 22%. It's a good trade in the morning. You're breaking the ice screen, have
Yeah.
fun. But it's like, I don't have a sell signal on the 1 minute. I don't have a sell signal on the 5 minute.
Yeah.
And that's why you need these things to help you guide, because you don't need nobody to psych you out. Sometimes you'll just psych yourself. You don't need
Well,
the news.
absolutely. Well, isn't that the
That's why I
truth,
don't
right?
add that on.
Isn't that the truth? If this is your 5 minute Solana chart, and just to kind of demonstrate what you're talking about, if you're looking at this area in here, right? You could have been dealing with this candle at the time, going, I don't know what to do, but the divergence is
Exactly.
still intact, right? And as
Right.
long as it is, and this is frustrating even for me, like you know, I'm sometimes amazed at how true this actually is, right? But if this is kind of where the move that you were in, you're right. You had no reason to sell, and what would your target be on the way up?
I'm looking at the upper value range. I'm just looking at 160 and stuff like that. It's just a quick little trade. I like to start my day a little green. I still got cheese in my eyes. One of my community
There
members, Mr. Mo, was like,
you go.
they're doing Welcome to the Jungle. And I went to sleep at like almost 4 o'clock in the morning last night. And they're like, go to Welcome to the Jungle right now. I'm like, all right, bam. I just wake up. And then they're like, oh, we're closing this. We're doing Blunt House. I'm like, all right, well, I guess we're doing it's an active day today, right? And I was like, I like to dip my toes in the market because I love the market, right?
Yeah,
So if I see an opportunity, and with the indicator, it allows me to appreciate the market. That's the new level that I found. It's like I really, really, truly appreciate it so much. Where like, okay, I understand it. I can print a little bit. I can chill for a little bit. I can print a little bit. I can chill for a little bit. I don't feel the stress that I did before using the. And I was joking on the live stream yesterday. I said he's gonna have to give me like a referral link for his indicator. I'm, I'm shilling this thing like crazy every day, but it would be me doing an injustice to the space to know that I've been in crypto since 2017. I've been a profitable trader. I've also lost money. That's normal trading futures, right?
mm-hmm.
But I've been, working from home since 2017 and really went hard in 2021. But it would be an injust that even with that level of time that I've been trading the market, which is nothing compared to what you've done, that one little indicator, it's not little, but that indicator can come into my life and make it so much easier. It was like a missing piece and stuff of like, I was just always leaving profits on the table. And that's where you start to chase other things because
Yeah,
your thirst is not satisfied. Your quench is not, your thirst is not quenched and stuff like that. So
yeah,
now my thirst is able to be quenched because I can get a solid trade. My target's 160. I'm confident that it's going to go there.
yeah.
My mind wants to talk me out of it, but the indicator says stay in it. So referral link coming soon, fam. No, I'm joking.
Well, no, I appreciate that. It actually helps you, and I find that I'm always like, impressed and grateful that people who have traded in the past and even used signal trading in the past, but that are somewhat experienced, say, "Wow, you know what? This is really helpful, and it's making my life easier," which is really what I was trying to do when I created it, just for me to take out all the stuff that screwed me up all the time. Right? Like I'm pretty honest with you guys. Like I have a tendency to overthink stuff. It's one of my weaknesses that I can think too much. But I'd like to think that I was smart enough to recognize that it was a problem for me, and I had to find a way to take the thinking out of my own trading so that I could do just exactly what you explained, right? And not worry about what I feel or my bias, just simply rely on what the chart's telling me, right? That
Solana
is,
right now, brother.
yeah,
This is a perfect up 30% now. That would have been money left on the table. You've honestly I
Yeah.
enjoy it a lot more. It's not that I didn't enjoy it before, because I like the idea of being, like, dependent on myself, but
Hmm.
I was overthinking stuff, bro. I'm the same way. Like I'm thinking that I'm thinking of what I'm thinking about. It's like, like it's a good thing. It's great that you
Yeah.
can operate on this level, and I got four screens, two laptops in front of me. But there is times where it gets you in trouble. And look, I would have missed out. It's 34% now on this Solana trade, pumping up really hard. And
Hmm.
if you guys are listening to me live, I know we're broadcasting on X. I know we got the OG Gorillas in the TG, but I know we're live on X as well. Please give my man Blunt House a follow. This is
Thanks,
Rico
bud.
Moneyback speaking from the TG. I need you guys to give this man a follow and tap into everything that he's talking about, because I'm the same way. I'm very transparent with everybody, and I like to use myself as an example. And every time I come on live, which is like I get to do it and get to show everybody, right there, because talk is cheap, man. It's a whole nother thing to actually do it. So I love being able to do this with you, Blunt, and I really appreciate everything that you do,
Well,
brother. I
listen,
mean, it's
thank you.
amazing.
A lot of people can't even see the script because it's actually an invite only script. So, and there's this one I'm showing actually isn't up there yet. The original one is. Um, this is a 15-minute Solana chart, and it kind of gives. So if you were on the shorter time frames, and you're in what you're feeling is a little bit of a runner, you're instinctively doing what? Now you're looking a little bit outward. You're probably flipping to a 15-minute like this, and you're like giddy with excitement. You were astute enough to listen to the chart and stay in this trade, right?
Hundred
Chart. You
percent,
didn't know this.
40%
You
now.
didn't know this candle was coming. We talk about
Absolutely
this
not.
every week. Is all you know is that you're in an uptrend, and you have no reason to get out of it. So on this 5 minute, now you're into the gap, right? So that's why this thing's taking off, because it's into a gap. And when you hit the 15, you now have a buy signal on your 15. It's going to what you hope is going to happen is that to the upside, you're going to look to take out the previous wave's high, and then you also have the lower value range level as a legitimate target, hoping that it can break that and get into this gappy area. You might run into a little bit of resistance here at this small shelf, but if you can get into this gappy area, well then the POC is a legitimate target, right? And this won't be a straight move up or anything like that. It's a process, but that's how we start to layer on those targets. And to your point, if we do that, let's just quickly add a 20, 50, and 200. Okay. Now I like this even more now. So here's this is what you wake up in the morning. You just woke up and found this. You're buy a lottery ticket too. So here's your 20 and your 50. This big green candle with a confirmed buy signal. Yeah, I like that a lot. I think you're into something on this one. You might be in this for a while.
And man, that's my favorite trade right there, is your indicator breaking past the 50, together. We're up 45% now on the trade. But like I did this trade on a 1 minute to 5 minute, just like, just trying to,
Good entry.
get my clothes wet. Yeah. But, even seeing this, like if you're looking at this, because it's very fractal. Once you start understanding this, is like I saw the same thing on the 1 and the 5 that we're seeing right now on this, 15 almost. It's just that
Yeah.
it's actually following all the way through. But when I see that blunt house indicator breaking these moving average, especially I'm cherishing the 50 moving average because it's just been so well to me. But that indicator mixed with the 50, it's like it doesn't get any more bullish. And you could see where prior the indicator was saying buy, but it wasn't breaking to 50. Those are the trades that I've learned not to take. And I think that's where, like, if you look at the indicator long enough, you'll understand that not that they're false signals, they're letting you know that they're going up, but you won't jump into these choppy zones where,
Yeah.
the real sexy zone is going to be when that indicator and that break of that candle breaking right through these moving average, especially the 50 at the same time. Because we had some fakes on the left on this 15, right? We got
Oh, sure.
a buy signal, but it crashed out against the 50. We got a buy signal, false breakout over the 50, back down. But when you have that buy signal and the 50 together, it's such a powerful trade.
This is a great example. So here's your entry. You had, and if you would have taken it, this was a slow grind down, yes, but you did not get a reversal signal at all. And here's your first green go, right? But you've got the 50 as your resistance. And is this the first time that we visited the 50 since we broke it? Yes. Does it have a high probability of a failure? Yes. And if that happens, what do? We take out the previous wave's low. Yet again, we show it all the time,
Right.
right?
Right.
So, if just as an example, you get in at the top of this 15 minute, that's golden. First touch rejection, also golden. Like it just, and the downtrend continues, right? And you just rinse and repeat. This is no longer your first attempt. So here you go. Like you get the green candle, all that divergence is already in place. You had your signal down here, but boom. And then a reversal again to do what? Take out the previous wave's low.
Yeah, I just hit my target. You were talking about earlier today,
Yes.
about setting your targets, right? And like, I was trading on a 1 and 5 minute. Now the 15 minute, it makes me very tempted just to hold it and ride it. But my target was I'm trading this on a one, and that's sometimes that I like to do is like I've been really strict on like if I started this trade like this, it's kind of how I want to finish it because then, this is where I start getting overthinking where I'm like, oh man, but we're good here and we're good here. And it can kind of spiral. Like my target was 160. I hit just underneath that, which is good enough for me. I know sometimes chasing that exact round number can get me in trouble because everybody else is looking for that round number, right? So yeah, I mean that's a nice little thing. And plus on the 5 minute chart, we're bumping into the 200,
Mm-hmm.
and that's usually a pretty like substantial little area where like we can't break that. It'll come back around. I could have easily stood in this trade because the 1 minute does not have a sell signal.
Mm-hmm.
But I decided to take profits because that's what I wanted to do right there, and that was my target. And that's something that he talked about earlier was like, set your targets and actually take these profits off the table so you can grow your account, right? And later on be able to let it run even a lot further and stuff like that. So,
Oops. No, I'm
are
really.
you okay, Blood?
I know, right? Stuff falling off my desk here, everything. Yeah, no. I'm glad you mentioned that because I realized the other day that I spent a lot of time talking about stops and people were doing it, and that's awesome. But then in conversation with someone, I realized that I haven't been speaking enough about setting the targets, right? And it's great to have a stop loss in place to protect yourself, but if you take the money off at a reasonable target, then you're going to start to grow your account, like you said. And I'd like this, when you enter the trade, you know where you want to exit, and you will have already set a target for that. And
Yeah, that was
if
a
it,
40 something percent trade. So that's good, right?
yeah,
If I do another one like that a day, that's good. I'm not arguing with that. I see it pumping and it wants to, but I also know Solana. I know the market's very volatile right now. It can switch back on me really quick. And I set a target in my mind. And yeah, I'm glad that we're focusing like on targets because sometimes when we focus just on the stop loss, it's like we're almost going to hit these things, right? And it's like,
yeah,
let's focus. Say, yep, I hit my stop loss. Yep, I hit my stop loss. It's like, let me hit my target actually. Let me do
exactly.
that.
That's the one you really want to tag. And to your point about taking your money off, like if you're watching this chart, this stochastic RSI has been running hot for a while on this time frame, right? And yes, what happens in here is that when these candles get a little bit over anxious, um, what's the word I'm looking for? A little bit overzealous, right? They get really hot. You're already trading, you know, a distance away from the T line and the 5 EMA, and you've got the 200 back in here and the 50 and 20. So at some point in time, when this thing takes a rest, it'll close that gap. So to your point about, oh geez, it's only a couple more bucks to reach the promised land, but it's just a bridge too far, right? And the market will do that to you time and time and time again. David Elliott used to say, don't ever, ever, ever criticize yourself for taking your profits, regardless of whether or not you thought you should have had more if you would have done something else. Don't look back, right? You've got a journal, you can chart everything, and document everything, and at the end of the week, you're going to look back and do a real deep dive on how you performed, and you'll know what you did wrong, right? But you can't,
Yeah.
don't chase. If you're chasing and breaking your methodology, that's probably a bad thing, right? Stay true to what works for you, right?
Yeah,
Don't,
plan your trade and
yeah,
trade your plan. And that's what I've been doing. Like
yeah,
honestly, like and what helps I think when like that happens is like because I know that I can make money on the downtrend, I don't feel like I have to hold it forever because I'm it's like it's the only time I'm gonna get to make money because I'm in the perfect long. So, it's like once that long is over, it's like no, it's like I'm cool with this and
yeah,
I understand where the market's at right now. I hit my upper value range, which was I love trading these gaps. This is another thing that I picked up from you. And that's what I planned. I said I want to trade a gap in the value and in the volume profile, and I wanted to hit the upper value range. It did that. Okay. It didn't hit exactly the round number 160, but 159 and a half and some change is pretty damn close. I'm okay with it. That's what I planned out to do.
yeah,
I'll snatch the 40% off
yeah,
and just enjoy the rest of my day and then do it again later on when I see the setup happen. I'll fade it when it turns around and goes down.
yeah. And are you finding, Rico, that you have less um, attachment to price direction?
Way less. That's where that's coming from right now. Is that I know for a fact that I would have been like, I'm in the winter. I'm looking for that couple more. It's only I'm better at longs than I am short. I mean, I can eeny weeny teeny weeny short man. I don't know if you guys remember that song, but I'm laughing now because I can do the shorts, and this makes him more enjoyable for everybody. So like,
Yeah,
set your targets, right? Let's go with that terminology. I love that.
yeah,
And take your profits, grow your account, and then stick to your plan because your plan works in reverse. It's literally just the opposite right now. Like I have no doubt that if I sit here long enough and I wait for my chance because I know Solana good enough that I'm about to get a sell signal on the 1 minute chart because I already hit the upper value range. I like trading these gaps. I've gotten really good at this little rhythm. So yeah, I'll wait to trade the gap down, right? And I'm cool with that. Or I'll wait for another setup. And it's about building even a good relationship with yourself, right? Because
yeah,
boy, you can be mean to yourself if things are not going your way
yeah,
when you're trading.
yeah.
So be nice to yourself.
No, that's not like, I really like what you're doing, using all these different time frames, looking forward, backwards, and side to side, just like you do when you're driving a car. If the whole intention is not to get hit by something that you didn't see coming, and knowing, like I tell you guys often to get off the short time frames, but for a different reason. What you're doing here is fractal analysis, and I'm totally okay with that. Right, like that's what you should be doing. Right, making sure that regardless of the time frame you're on, like the chart does not lie. As crazy and as irrational as this move might feel, especially when you're in the trade, right? Like, oh my God, this is too good to be true. Like, should I cut it now and just, go home and be happy? Yeah, you can. But what our system does is it allows you to manage these exact situations, right? So that you, like, here we go. The chart is telling you we have no idea what comes after each candle. Is all we know is that we're in a bullish trend, and the market is telling us, because it's the language of the market, that the tools we're using are telling us that we're good.
And you can see right there where that candle literally hit the upper value range.
Yeah, right
That's the
on.
trade that I wanted, right? That's what I plan to do, and I'm okay with how it worked out. So, that's my trade right now. I'm not even. I like that I see that people can continue to make money because I know that when it turns around, I'll be able to do it again. So,
Yeah,
it's looking really good for those who stayed in the trade. I never got a sell signal on the 1 minute or the 5 minute. It was getting close to it, and I know Solana how it kind of works and stuff and the range that we're in. That's why you got to be familiar with the
yeah,
stock or whatever. But my plan was the upper valley range, and I'll come back and do it again and stuff. And
yeah,
sometimes I've let some runners go where it's like 100 and something percent up, but I found that I do really good snatching these 40-50%. I can do that pretty easily actually on a regular basis, or even 20-30, and be okay with that and just come back later on and do it again.
mm-hmm.
Now I was high on leverage on this. I was kind of doing what Blunt was talking about earlier. I was laughing. I was a 50x lev, but I was doing 1 minute, 5 minute, and exactly what he was talking about. I was doing multi time frame analysis, so I can just pop, and I'm happy with that 40% with that 50x lev. It's smooth.
Yeah.
Just continue my day.
And you know what? For anybody that is listening or watching and is considering, like, geez, if I actually apply myself to learn what these guys are talking about, is it possible to maybe substitute this with the part-time job that I thought I was going to get? Because that's what a lot of people they're looking for. They're looking to subsidize their income. Not often by a tremendous amount. Like you said, sometimes it's just that part-time job type of thing. But then you got to get a babysitter for the kids, and it's like, by that time, it's what you earn is eaten up. And if you're any one of those people wondering like how can you subsidize an income, this is an example of exactly how you can do it. Whether you're trading crypto or commodities or stocks, it doesn't matter. We've shown it everything on these charts, right? It just doesn't matter. They read the same. They just read the same. This is gold. And so anyone, please, like, don't think that you can't do this. You absolutely can do this. And it doesn't matter how old you are, the color of your hair, where you come from, your education. If you can be disciplined enough to do the simple things that we talk about, block out the outside noise, focus on your charts, just do the simple things. Like the chart said to go long, or here's an even better example. If you woke up in the morning and saw that signal on this week at a major moving average with already defined divergence, you don't have to know anything else. Seriously. This is what you have to know. Price go up. Price hold the levels that we needed to hold. The T-line has Fibonacci-like properties, as Stephen Bigelow would say. Price continues to go up. You guys can do this. This could be a crypto project. It could be a stock. It could be anything. Anything. It doesn't matter the time frame or anything.
Yeah, 100%. And it's really about like, you honestly owe it to yourself just to take a little bit of time out of your day to do this. I think you said something really, really important. You could really, you don't have to try to chase. And I think this will help people out, what you just said, as far as like trying to chase to make the $1 million right away, it's going to set you up to fail. But, if you can start off where this picks up like maybe a part-time, where it's like a part-time job for you, I think that's a great start. Like that type of reference where you start to see it and build your account and see and start to see it affect your lifestyle in one way, so that way it's not all this rent money pressure, car note pressure. It's just, hey, I'm trying to make a little extra cheese on the side, to help me out, maybe pay some things that I need to get taken care of, whatever, this, that, and the third. But that right there, the bug will bite you around there. When you start to notice like, hey, wait a minute, today I caught a runner and it covered everything that I needed for this whole month. Can I do this again? And that's where that bug starts to bite you. But you almost need to, it's pretty interesting because you almost need to lead yourself in the direction to get curious enough to want to continue to push forward and stuff, right? It's like you almost got to parent yourself at times where like, if you ease your way into this and you can get enough excitement out of it where people see the substance of what came out of it. Like, when I started seeing that cutting grass and shoveling snow, I can buy whatever I wanted as a kid. I was a very hardworking kid from a very young age, right? Because my mom didn't have a lot of money. So, I got to see that turnaround of, hey, me busting my butt, all winter shoveling snow and stuff, let me buy the bike that I wanted to ride in the summertime with all my friends, right? So, if you can do that again, because if that works when you're young, it's going to work when you're an adult as well, right? And I like to tap into that side of myself, and I think everybody should just make it where you can get a taste of what this thing brings. Maybe it's just a little bike, right? And you start going on hiking things, and you're like, you know what? Because of my trades, I got myself a nice bike to go, on some nice trails, and I got some exercise that I needed. Can I do more with this? And that's where that bug will really take you to the next level and say, you know what? I'm only going to do this now. You can't even talk me out of it now.
I,
So yeah,
I think that, there are a lot of people in the world that are, everyone's having a more difficult time than maybe they're accustomed to. And sometimes it feels like the things that you're trying to, or the places that you're trying to get and accomplish are just a bridge too far again sometimes. This is the kind of tool that I believe bridges the gap, right? And I think what keeps people out of it is the belief that they need some kind of special knowledge. They need to have gone to business school. They need to be some sort of mathematician or finance expert or an economist, something to that extent, right? We're always told that this is very complex and you need to be a professional in order to make money. Now, yes, do you need tax advice and strategic money advice? Sure, of course, life's complicated and there's all kinds of things that matter, and these things change as we age, as we get closer to retirement. So, yeah, you need good advice. But let's talk about reading price on a chart. That's what's important. And if you can read price on a chart, you will have power that you didn't realize you ever could have. And you don't have to tell people about it. It doesn't, you don't have to get a bumper sticker made to tell people that you're doing this, whether it's, you know, full-time, part-time, or just learning, or intermediate, or experienced, whatever level you're at. You don't have to tell people what you're doing. I never did. Very few people knew I did this. Very few people knew. Because I didn't want to have to bother to explain after a while why I was doing it, what I learned, and what I thought about where price might go if God knows whatever we were talking about. Is all you have to know is when to see a short signal and a long signal. This is Apple. It's one of the largest companies in the world. It has more eyes on it than probably anything. Whether they be retail traders, institutional traders, analysts, everyone's got an opinion. Everyone's got an opinion. And most people will listen to these opinions. Right, wrong, or indifferent. Other people's opinions are not overly important to me when it comes to this stuff. I don't care what people think about a stock or a commodity or an index. I don't care what other people think. All I know is what I read on the chart. And this chart tells me that, hey, time to buy Apple, time to sell it, time to buy it, time to sell. This is a weekly chart, so you might make a trade and then not make another trade for a couple months, 3 months on this thing. That's okay. This was several months up here. Do you need to tell your friends to do this? No. Is all you have to do is take the time that you have that you would be otherwise doing useless stuff with and educate yourself on how to read price on a chart. You know what? And one day, maybe you will roll up in a new car. Or you start wearing different threads. Or, you know what? Maybe just going grocery shopping is that much easier. Everyone will do this for their own reasons. Whether it's that, hey, I'm a naturally curious person and I'm interested in this as a hobby, or a quasi way to supplement my income, yeah, all the time in the world. But it's not hard to do, and you don't need anything special to do it. All you need is dedication and the ability to block out noise and listen to your chart. Don't even have to listen to me, just listen to the chart, right? I just want to help you understand what it's telling you so that ultimately you don't need me anymore. And you guys can just do this all on your own, which I'm sure you can. I know you can. And it doesn't matter. Now, does that look like a bullish chart? Yeah, it does. SPWH, Sportsman's Warehouse. Probably not something that a lot of people are paying attention to. Right? Look at that chart. It's a horrible chart, right? Horrible chart.
it gets beautiful at the end, though.
Well, that's just it, right? So, the point is that we all have things like this in our watch list. I know we do because everybody is always looking for a bottom of something, right? You can scan for this stuff in TradingView if you want to, right? I do it all the time. Now, this company I happen to know a little bit about, so that's why I'm showing it to you, but it's an example of something where, for whatever reason, all of a sudden, the market likes it again. I don't care why, right? Believe me, most people that would look at this chart were bearish as hell until they're not,
Until they're not.
right? And and again, this, listen, if you were bearish on this thing all the way down here, and for whatever reason, the chart's telling you that this downtrend is over and it's time to move higher, I'm okay with that. It doesn't mean you're wrong, right? It just means that nothing goes up or down forever, and eventually price will move the other way, and that's what's kind of happened here, right? This is kind of a really cool story.
I
But
love that.
not many people know much about this company unless you live in an area maybe where they have stores. But I want to show you that right back here, when you had this gap up, and I've been following this, at no time, even it got, a little sideways, but the move was higher, but at no time did it change trend. Like, it gapped up and then stayed kind of in bullish mode, and here it just took off. Just took off.
Crazy how that had that fake out right at the end, just to, that's that snapback trade kind of that
Kind
happens
of,
and stuff.
yeah. I wonder what that
Yeah.
looked like on a shorter time frame.
Yeah, me too. So wait
But
a minute, what was actually going on right there? What
yeah,
did that look like?
but actually on the hourly, well, here it is here.
Yep, there it
Oh
goes.
yeah, there it is there. But you know, it told you to get right back in too. So if it,
Sure did.
but just a real good run. But there's all kinds
It
of
is.
stocks like this out there. All
I
kinds of
mean,
them.
look, I should have stood in the trade. I should have listened to the Blunt House. Solana's still running, but it's early. Cheese still in the eye, I think. They just woke up and just got straight to it. But perfect example. And I want to show how this always happens. So,
Ooh,
and this is a good example how, hey, I've already took my trade. I'm not going to chase this thing whatsoever. There's always going to be another trade. I hit my, because you see how where the value range is all gray up there,
mm-hmm.
that's where the volume is high. And it's like, I do really good trading in the gaps where the volume is high and stuff. So, but this is a good example. I never got a sell signal on either the 1 or the 5-minute chart, which
Yeah,
is what I'm using to trade this Solana trade. I'm out of it now, but I mean, I could have stayed in it, but I also do know that sometimes you can't sell the ultimate top. You can't buy the ultimate bottom. It's like,
yeah,
it's like I like to smile. I like to go outside and enjoy my day. And like if I usually stick to my guns pretty good, where it's a, I shouldn't become, I shouldn't have remorse, like buyer's remorse over a 40% trade. That's a great
no,
trade. Go enjoy myself. But um, what's nice is that I have the flip side to know that I can trade it going down as well. I don't have to run after it to say, maybe I need to get back into the long. It's like, just let it do its thing. The market's so volatile. You'll get another chance at it.
yeah, no, absolutely. There's always another trade, and I think that I always talk about how do you know once you're in the trade whether to buy or to stay in it or sell or whatever the case may be, and what you're talking about is exactly what we talk about every time. Like, as long as you're trading below these levels with with no break in the divergence, you can stay short. Right? Here's your invalidation down here. But just it's so easy, right? This is the hourly.
missed out on a bigger runner than what it was. But yeah, I could see it right now. Now that I'm not, because when you're in the trade, you're in the hunt. You're
Yeah.
in a different mode almost. There's blood in the water and stuff. Now that I'm out the water, I'm like, wait a minute. But you know what? Like I said, I feel good about the trade. I'm over here talking. I'm conversing with you. I want to be able to manage it pretty good at the same time.
Yeah.
And, but yeah, it's amazing to see it still run, and
Yeah.
it's also a great example of like me still having to work on trusting the indicator even more, because I could have psyched myself out earlier and missed out on the profit when it was like 20 something percent. The indicator let me make it up pretty. I probably missed out on like a good 60 something or whatever. But
Yeah.
this is what I'm working on. And I think, the more we have these conversations, if you guys are listening on X, I see we got some people listening on X, we pull up here all the time. There's always some wisdom being dropped in here, and it helps us all be transparent with each other in a nice comfortable area where we can get better at this, and highlight areas that we need some refinement and stuff, because steel does sharpen steel. And
Mhm.
I'm not perfectly sharp, but I'm working on getting all the way katana level blunt house slicing style of the chart.
Well, but Rico, you're actually a really good example, though, of someone who has just kind of who had some experience, right, and has embraced this and has turned it into something that put some bank in your pocket, and that's exactly what we wanted. And I'm sure you're looking at this 1 hour, going, man, I got the signal on the 5, then it showed up on the 15, and here it is now on the hourly.
And there's a gap on the hourly if
Is
we
there?
go to the right, because on the hourly chart, you were talking, I was like, man, that gap on that volume profile looks so juicy.
Let's see. It'll show up here in 2 seconds.
Yeah, but that's those gaps, I
Uh,
love them, man. Yeah, look at
yeah.
that. There's a
Oh God.
So
those
I
gaps
might
are
I
cool that
might
I
trade
learned.
right now. Hold on.
yeah. So I
But
was
and then your trade will be an hourly trade. You'll be focused on that hourly trade. But
yeah.
um,
It,
yeah, it's a
I
beautiful
was
gap right
I was chatting with our friend Ben June, who we've had as a guest a couple times, and he talks now about how he trades in and out of these volume gaps. Like once you see them, you can't unsee them, and
there.
once you
There's
recognize what's in there, which is nothing, you know that your long or short trade should move through there pretty quick. Right? Here's your 4 hour. This is the one that'll kick you if you get a buy signal on the 4 hour. You'll be like, ah. It's-
only use star blunt. No, 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 no. We'll see. We'll see.
yeah.